Hey, how you doing, ladies and gentlemen? This is Dr. Greg McLeod here from Elite Traders University, and we're going to do bears versus bulls, bulls versus bears. This is going to be our weekly Forex forecast, and my name is Dr. Greg McLeod. It's so good to be with you here on this Saturday morning or Friday evening, wherever you are in the world. I hope you are doing well, that you're blessed, you're staying healthy, and you're spending time with your loved ones on this fabulous weekend. Lots of big news coming up. And in this broadcast, what I'm going to do is I'm going to go over the economic calendar that's found at My Market Heat Map. And then we're going to look at the economic picture. And then we're going to actually link that to the technicals, because usually the markets move based on the underlying economic factors that push prices along. And the technicals are like footprints in the sand, which we can look to find what the trading opportunities are. Okay, so without further ado, let's go ahead and get my number one tool for trading up, and that's the My Market Heat Map. It's an arrangement of currency pairs by percentage change. It tells me what's hopping, what's popping, what's dropping, and what's not in the market. And so we're going to pull that up, and we'll pull up the economic calendar. So let me go ahead and back to Zoom here. And I'm going to share my screen. I'm going to share. Sharing is caring. I'm going to share screen number 1. Yeah. All right. And then we're going to just zoom now. Okay. So this is My Market Heat Map. It's an arrangement of currency pairs by percentage change, but it's a full featured. I mean, there's lots of features in here. I mean, I should just do a webinar just on all the features that are in My Market Heat Map. And we probably are partnered with a Surge Trader. The My Market Heat Map, it's in your hand. It's a high-powered scanner. Green things are in the uptrend, red things are in a downtrend. And so it's a powerful tool for scanning the market. But there's also other things there. Now, normally these tiles will turn different colors and start moving about, and we want to trade the strongest ones and short the weakest ones, right? In fact, it's not just heat maps. There's a trader toolbox, and there's also education component with many videos and things to help you. So you can see the whole market, never miss out on the next big opportunity. And so we have our annual price. You can take 50% off right now, and you can check that out. But it has the heat maps, trader tools like charts, quotes, economic calendar, Forex TV, financial news stream, market hours, technical screener, national holidays, sentiment, currency correlations, and much, much more. And we also have the tutorials, how to choose a broker, how to find different trends, risk and money management, tips to successful trading, plus bonuses like private coaching session with me, premium email support, VIP Facebook group, and also so just a whole bunch of stuff. But let's get to the economic calendar. One of our tools. It's a one-stop shop. I mean, a lot of people jump from one tab to another, but we're just going to go here. Economic calendar. We're going to go for next week. And we want to look at the high indicators, the high impact. The high impact news announcements are the ones we want to focus on. And there's lots of different news items that come out. But the news that comes out at regular times. In the US session, there's 2 times where news comes out, and that's at 8:30 a.m. Eastern time and at 10 Eastern time. Okay. Sometimes you get an oddball that comes out at 9:15 or something like that. But usually the news comes out before the stock market opens in the US, and then just before the European close at 10 a.m. But there's European news. If you're up trading the London market or the European market, well, then they'll have 2 o'clock news, 2 a.m. news, right? So let's go ahead and take a look at the news for this week. And so again, news is like a big rock, and when that rock hits the water, it creates a ripple. And think of all the little currency pairs like little boats floating around, or they would be pushed by this ripple of news. And so this is what we're looking at. We're not looking at trading the actual news event, but we do in mentorship. We do that. But if you are not in mentorship and you don't have predictive indicators to forecast price and get you in beforehand, which I'll be teaching in Las Vegas at our Las Vegas Forex Mansion Mastermind. I'm going to be doing live trading. I'm going to be doing some teaching, talking about how to precise entries and exits with how to scale up a small account and a number of other things too. So make sure that you get into this almost sold out event. I would love to see you there, and we can benefit from being in the room with like-minded individuals, trading. We're going to actually have a VIP, trading at night, trading the London session. So we have a beautiful mansion with a pool, kind of too cold for the pool, but we have a jacuzzi and things like that. So look forward to seeing you guys there. Okay. Anyway, so we've got news. We do have some Japanese news. I don't particularly look for the Japanese news. Japan is kind of, they really want their currency weak so they can export stuff cheaply to the United States. And so they're going to manipulate the market literally in order to keep their so we can automatically know that the yen's going to normally drop. Going into March, it may rise, but right now we're going to ignore that. But coming up on Tuesday, February 14th, on that Valentine's Day, will you be my Valentine? I hope you if you're not trading the markets, you've got someone you love, get your box of candy and flowers now, because there'll be a big rush at the store, right? So at 2 a.m. on Valentine's Day, we have lots of UK data. We have average earnings, excluding bonuses. That's a high impact item. And another average earnings, excluding bonuses, ILO unemployment rate as well. And so there's going to be lots of action in the pound versus the US dollar, the pound versus the yen, the pound versus the Swiss. So you want to look at the pound pairs. You might want to just create a watch list on TradingView or an MT4 where you just line up, you can drag them together, drag all your pound pairs together and make a screen, and you can sell it as a profile. And that way you can see that, these aren't just going to move Tuesday. They're going to start moving Monday and start moving in their direction. Currencies are like big ships. It's a $6.1 trillion market. So, these guys are going to start accumulating. They're going to accumulate or distributing. They're either getting ready to take it down or take it up. The operators are in there getting ready to push price in a certain direction, and they need time to do that. And so, yes, there'll be a big move on the announcement, but the moves will start seeing the ripple of the current. You'll start seeing that move happening earlier, and that's going to provide lots of trading opportunities leading up to the event and an hour afterwards, where it's a little bit safer to enter the water during that time, if you don't have the predictive function indicators like we have in mentorship. Okay, moving right along at 8:30 a.m. Eastern time. Like I told you guys, this is Eastern time, which is New York. Okay, we have lots of inflation data. Okay, so when you see consumer price index, or you hear the letter CPI, the index, just think of inflation. They say, oh, it's an index. No, just think of inflation. They want to throw you off. These are consumer prices. And if consumer prices are higher, well, then that's usually good for the currency, or as far as moving the currency, not actually good for the average person who has to spend $9 for a dozen eggs. Anyway, consumer prices usually benefit the currency if the interest rates have to be hiked in order to fight inflation. However, if we see a lower CPI, it actually could hurt the dollar, and also cause the other currencies to rally. Could also cause the stock market and crypto to rally as well. So don't stick your head in the mud. You say, I trade crypto, I don't do anything. So I trade. The CPI is going to move the markets, because that's what Jay Powell of the Fed, Jay Powell's the head of the US central bank that's called the Fed, okay? And the Fed will control the money supply. They're either going to, if they see that prices keep going higher, they're going to reduce the amount of dollars that are out there, and that's raising interest rates. They're not going to print as much money, and then they're going to let stuff roll off their balance sheet, and that's going to cause the dollar, because there's fewer dollars around, supply and demand. Fewer dollars, higher value of the dollar goes up. And anything that's traded against the dollar, like BTC/USD, right? Or AVE/USD, or whatever currency, crypto. It's even like Amazon/USD, because you trade your dollars to buy Amazon stock, or TSLA versus USD. You are trading your dollars for Tesla, but the dollar all of a sudden is getting up. You can put your money in a 4%, long-term CD or something like that, and not incur any risk, versus, you've got Elon Musk making a tweet and causing his stock to drop, or, then that is going to be, people are going to look for safety. They're going to look for the dollar, and so the dollar could continue to rise. So that's what you want to look for. In fact, when I'm trading the U.S. pairs, or the U.S. dollar, or the American or U.S. news, I trade the euro. And I'll tell you a reason why I do that. The euro is regarded as the anti-dollar, so it would be very sensitive to U.S. news, because they built this whole currency to be the counterbalance to the dollar. When the dollar is weak, the euro is strong. When the euro is strong, the dollar is weak. So it gives the rich people, the big players, a place to run their money when things are going the right way or the wrong way, right? So a consumer price index, and MOM is not mom. Okay, your mom is not, it's like your mom. No, it's not your mom. It means month on month. Okay, so they're comparing the previous month, January to December, right? And they have consumer price index X food energy. X means not like, hey, it's not like your ex-wife, X food. It means without food. Okay, they take the food out, because food is very volatile. It goes up and down, especially with egg prices, and different kinds of things can happen, energy. So even though I use food and I use energy, they're going to look at inflation without that year on year. And they says, well, it might be at 5.7%. Then you're going to have the year on year CPI, or consumer price index, with food and energy. And that number is usually higher, much higher than the one without food and energy, right? Because we use food and energy, right? I don't know anyone who doesn't use food and energy, so I don't know what that number is. But all these numbers are going to be released at the same time at 8:30, and it's going to be a big ripple effect in the market, right? If a CPI is what they call a hot print, meaning it's maybe north of 6%, 7%, then the stock market is going to get crushed, right? If it's under or about the same, then we could see a rally in the stock market. And you don't want to see a rally on a Monday. You really want to see a rally on a Tuesday. And so if we dive on Monday, usually we'll see a rise on Tuesday, but because they already know the number. These guys, it's like Clarence Beeks in the crop report. Okay, you guys, if you were Trading Places fans with Eddie Murphy and Dan Aykroyd, and they're trying to get Clarence Beeks and get that envelope with the crop report, this is the crop report, right? It's probably not. And so we'll see similar volatility in the market, right? But they've got the envelope, and they've already reading the envelope. And guess what? They're going to position themselves Monday because they've read the envelope. And then they're going to announce it and go, oh my God, I can't believe it said this at this. And they've already positioned themselves, okay? So it's fixed. You heard me. You just inferred that. Yes, I did say it was fixed. And that's good, because if somebody's got to make some money, it might as well be us, right? Let's move right along to Wednesday, February 15th. Let me know in the chat box if you found this interesting. In fact, like I said, I make economics very simple. I don't care what these numbers are. I know that you just got to follow the money. And you got to assume that these guys already know the actual number, and they're already going to start pushing their money into this in one direction or another. And that's what you're looking for, the current. You're not jumping on the wave, right? Locals in Hawaii, if you don't look at the wave, you're looking for the current and the water that turns into the wave, right? So we're looking for the current. Okay, so let's go to Wednesday, February 15th. Well, guess what? It's inflation day in the UK as well. CPI month on month, 2 a.m. Eastern time, and CPI year on year at 2 a.m. And if you're still up after trading that, baby, now if inflation falls lower than expected, then you could see that you could actually see this one drop as well. Bank of England wants to raise rates aggressively in order to crush the back of inflation. And that means job losses, plant closings. It'll be painful. Okay. They don't want to, especially if it's an election year or something, people get really mad. You're already seeing strikes in England, transit strikes and things like that because of the inflation. And really in the short term, when the Fed starts, or the central bank, whoever central bank it is, or this Bank of Canada, Bank of England, Reserve Bank of Australia, Reserve Bank of New Zealand, if they start raising rates, it actually drives prices higher, right? Which is kind of like stupid, if you think. But, in the old days when people used to get sick, okay, they get a fever. I mean, people get fevers now, right? But, but in the modern days, give them an aspirin. We want to lower the fever. And the fever is like the body's self-defense mechanism, because guess what, guys? Bacteria and viruses don't like it being hot, okay? So if your body gets hot and they die, then you get better, right? So what people used to do is to bundle people up in blankets. And I remember my mom doing that to me. Bundle you in a blanket, put a scarf on your head, and do all kinds of stuff to make you super, super warm. And all you gotta do is hold that temperature up a little higher. Maybe you're at 102 and it goes to 103, 104 for like a few minutes, and then the fever breaks, because all the bad guys are destroyed. All the viruses and bacteria can't exist in that hot a temperature, right? And then you feel better. You're sweating, you're hot, you're mad because your mom put all these blankets on you, but you're better, right? And it was uncomfortable. And that's how raising interest rates is viewed around the world, okay? It's like a short-term medicine to solve a problem that could just totally erode value, where you have prices going up every single day, like in Europe in the 1970s. They had chalkboards because the prices were changing so fast. Then you don't get a sticker and a marker. Hey, it's too slow, right? They just erased a chalkboard, and tomatoes are going up to 50,000 lira or something crazy like that, right? So everyone's afraid of. There's fewer people alive who remember the hyperinflation of the 70s, right? So people, if you're young, you're like in your 30s, you're like, what they're talking about, inflation, because you basically lived your whole life under deflation. So you don't know what high prices, and this is like nothing. It's like, oh, really? This is not like, 9, 10%, we were close, right? But interest rates are like, 12 and 15%, that's when it starts getting wacky. And you're waiting in gas lines. Oh, that's right. We were waiting in gas lines. Okay. Anyway, so a little history lesson there for those of you who you millennials, young people don't know, like, what are these old people yelling about? They're trying to keep you from, experiencing the hyperinflation of the 70s. And that's why, they're going to make things hotter in order to break the fever of inflation by jacking everything up, right? And then everything will start coming down. But it's going to take it'll take a toll on people's jobs. It's going to make housing unaffordable. It's going to cause prices of homes to fall. It's going to cause, high-tech firms require cheap capital. They burn through capital. They're constantly taking loans and loans and loans and loans. And when that spigot is turned off, what do? Lay everyone off. So were they that profitable? $1 trillion companies, $1 trillion this, Apple's $1 trillion, Microsoft's $1 trillion. But all of a sudden, you cut off the free money from the Fed, from the cheap, easy money, and all of a sudden, they're not so big anymore, and they're laying off people. So that's the tech industry has always been closely linked to interest rates. And you saw the tech bubble that burst in 2000, right? And we had Greenspan hiking rates back then, and that caused the tech bubble to crack. So if you live long enough, the cycles are really, really amazing to see if you're old enough to actually see them. And this stuff just repeats. It just repeats. Now, if we're in 2023 and we go into 2030 and you think what happened in 1930, that could be very concerning, right? So they're very, very interesting. We start looking at some of the things, the pandemic every 100 years, we have wars every 100 years. If everything is just some type of repeating hologram, you can almost, what happened in 1923, and then you can like, okay, this is the guy, we had this kind of stuff going on too. It's scary, kind of how parallel things are, right? Okay. Anyway, where was I? FOMC with retail sales. Wait a minute, retail sales. That's very important because 70% of the U.S. economy, the GDP, is made up of consumer buying stuff. So this is a very good number. If sales are high and the consumer is strong, then that's going to be very good for not the dollar, okay? Because people are willing to give up their dollars. So they're going to put more money in circulation. It actually makes the dollar worth less, but it causes the stock market to rally. It causes your crypto to rally. People will look for other places to put their money to gain greater yield, okay? FOMC minutes are going to also be on Wednesday. And so when you have FOMC, usually the market's kind of dead, kind of flat, trading between support and resistance levels. And it could be a really good scalping market because it's not going to break out, but it could be kind of dull if you're looking for a trend. Okay, so be careful after retail sales that the market could just go completely dead until 2 p.m. So be ready for that. Mark that in your calendar. FOMC minutes. The minutes, it doesn't mean they're looking at clocks and they're like, it's not like 60 minutes, right? Like, no, the minutes are the meeting notes, the notes from the last meeting. And they read the notes to actually tell us what were they thinking? What did they think that rates could go higher? Are they going to hike some more? Are they going to hike by 50 basis points or 25 basis points? Okay. So the minutes will allow us to get inside their head, know what they're thinking. And if they think, oh man, we didn't raise enough, look how we created 500,000 jobs last month. Oh man, we should have raised rates 50 basis points instead of 25 basis points or something like that. So look at that. They might be Debbie Downers, on the from the market, right? We had a super awesome jobs number. Go USA, super jobs number. America is moving forward, and the Fed goes, oh, that's too good. Let's raise rates, right? So people won't buy stuff. So inflation will go down. Well, the other solution to that is everybody stops spending and starts saving money, and then we create our own recession. But you have cash, right? And that will lower rates. If everyone starts saving, like they made in Singapore, that's why Singapore became such a powerful little country, a little city country, right? Is they made a requirement for everybody to save money. When everyone starts saving, then it caused the interest rates to go lower, provide cheap capital for people to borrow and start businesses, and they started to grow and become this economic miracle. Why? Because they forced people to save. They made a law that they had to save a certain percentage of their income. And when you had the whole country saving money, it made them into an economic superpower, okay? Instead of a debtor country like we're kind of like. Okay, anyway, off my soapbox, right? And maybe Dave Ramsey will come on the show, right? Because he talks about savings a lot too. Okay, we have Australia. If you're after the minutes, you're going to have employment change from Australia. So the Australian dollar currencies will be in play. Aussie yen, Aussie Kiwi, Aussie Euro Aussie, and that could be a good number that could benefit. Now, with these countries, if the number is good, their currencies benefit from having a good number, right? It's not like the U.S. If the U.S. has a good number, you see what happened, right? The dollar, and that's kind of changing too, because if it's too good, then they want to hike and it makes the dollar stronger. But it's not because, wow, we believe in the dollar in the U.S. economy. It's that they're hiking rates to force the dollar higher. Okay, because ordinarily good news, the dollar actually gets weaker as people pull their money out of bonds that are paying like abysmally low rates and put it to work in the stock market or in the currencies or in the crypto, where people can get a higher yield, right? But if people are scared, they're going to put their money in the dollar and put it in bonds and they'll be happy with the rate, because it's not about the interest rate because it's so low. It's capital preservation. It's a safe place, other than putting in a mattress, that you can save your money and protect it, because the U.S. Bond market is the most liquid and most the deepest, most liquid and safest. You know, it's guaranteed by the good faith of the U.S. government, and we haven't defaulted in a long time, so it makes it good, right? And if you try to invest in the bond markets of some of these countries, they're too small, so you become the market. The moment you put your big $100 billion in there, well, then everything just goes crazy, right? And when you try to sell, who do you sell to? You want it becoming the market. So you need something with a lot of liquidity that's super deep, right? That you can put your order in and it's not going to move the market. Okay. So we have that. And then Thursday, we have producer and price index. So this is on the wholesale side, the producers, you know, and they have month on month, and we have that coming up on Thursday. So we're going to look at the wholesale side of inflation on Thursday, February 16th at 8:30 a.m. Eastern time. So mark your calendars and set your clocks for 8:30 Eastern time. And again, we're going to be looking at the euro as the item to trade there. And then we have retail sales out of the UK, and that will be at 2 a.m. Eastern time. And that will wrap up the news, high impact news. High impact news brought to you by Elite Traders University. Okay. And the Las Vegas Mansion Mastermind. Okay, let's go ahead and move right on, and let's go to the charts now. Okay. You probably say, okay, Greg, you know, even though this economic, but see, now this is fun with flags here. Okay. We're going to look at the pound. We're going to look at the pound pairs, or I'm going to look at just the pound dollar. We're going to look at the euro, and we're going to look at the Australian dollar. So now we've got our trading plan today. We're not going to look at Canadian dollar unless we're looking pound CAD or dollar CAD or euro CAD, or Aussie dollar. Okay, so our universe shrinks all of a sudden now, because now we're going to be focused on currencies and that are driven by the economic calendar, because this is where all the liquidity is going to be coming from. Okay. And because news drives the market, news is the win and the sale. All right. And we're going to clear some stuff out. Oh, this is the DXY, the Dixie, right? And we're going to start with the Dixie. We're going to start with the US dollar index. And remember, I talked about bulls versus bears, right? I said that, I was medium term bearish and then longer term bullish. And sure enough, that's exactly what we did. We bounced off a long-term fib back here that we had. Yeah, and we bounced off that 50% retracement, and we're working our way up. We gapped down here, so we probably see that for Valentine's Day. Remember see the Valentine's hearts when you're a kid? Your teacher would draw on a piece of paper, draw half the heart, and when you cut it, those scissors, they had no point on them, and then you open them up. Well, this is what we have here. We have this heart, and we're opening up. So what happened on this side, bearish, we're going to have something similar on the other side. We'll call this symmetry, right? What happened on one side, what happened on the other? Oh, is that a heart? Wow, how deceptive. They give you a heart, but there it is. So why would they have this on a charting package? I don't know, but it's going to help show help me for my example here, right? Because we have our heart, and I really want a rectangle, right? So we have this bearish drop, right, on one side, and so we have symmetry where we actually have a similar move, bullish move to the upside, right? That represents the other side of the heart, right? And then we have, that should be, make this kind of a green. Make that green as well, right? So we're looking for this kind of the symmetry. So, well, Gray, that's a funky looking heart. You know, it's like he's like, I have a heart attack, right? No, he's not, right? And you know, this is so you have the symmetry. We drop and then we rise, right? So this is your heart, and we're gonna like fill that gap in. So we're looking at a move maybe to the 105.08, right? A little higher than that. Yeah, the whole number, round number. Oh, that's 105.00. That's the round number. So bulls versus bears, I am bullish, right? Now, the key of this is once you understand where the dollar index is going, we know what 7 other currency pairs are going to go. We know where dollar Swiss is going to go. We know where dollar the CAD is going to go. We know where dollar yen is going to go. We have a, you know, by knowing that, because the DXY is the same as USD. Okay, I know they're spelled differently, right? But there is this difference here. Or let me show you what I'm talking about. Right. So here we go. See, DXY equals US dollar. So if the dollar is up, then AUD USD is down. NZD USD usually goes down. Pound versus USD goes down, and EUR USD goes down. Again, we have the bullish. If the dollar is uptrending, then dollar Swiss will go up. Dollar CAD usually goes up, and dollar yen usually goes up too. And I put a star because sometimes dollar yen does its own thing and does what it wants to do. So I'm not so confident, because sometimes you're dealing with 2 risk-off currencies. So if things are bad, some people are running the yen, it might even move sideways, right? But the simple ones are the ones that don't have a star by them. But people will jump right into dollar yen. I don't know why it didn't work. Well, maybe because that's why it has a star by it. You run right toward danger. Like my daughter's now, let's go to the volcano. Yeah, it's smoking. Let's go take a look. That was fun. It was. Bearish. Aussie dollar. If the dollar is going down, then Aussie dollar goes up. Kiwi dollar goes up. Pound versus US dollar goes up. Euro versus the dollar goes up. And similarly, if the dollar is in the front, in the base currency or the counter currency, USD down, dollar Swiss is down, dollar CAD is usually down, and dollar yen usually goes down too. I have a little star by it, right? So once you understand where the dollar is going, you understand where these pairs are going to go. You know where 7 currency pairs are going to go. So it's like buy 1, get 1 free. Buy 1, get 7 free. I hope that helps. Let me know if you found this helpful. Okay, those are the kind of lessons that we teach in mentorship, and you get to concentrate being in the room in the Las Vegas Forex trading mastermind. Mansion mastermind is going to be fantastic. So I look forward to being with you and seeing you there. Okay, so fantastic. So let's go ahead and go to the euro. We'll go into the anti-dollar EUR USD. Okay, and let's go, and we're going to take a look at this one here. Okay. Okay, we'll remove all those drawings. You got to clean up after yourself, and we can see that as the dollar was rebounding higher, the euro was dropping. Right. This is our daily chart. We can see that even though we had some higher highs and higher lows, this, if you look at the overall trend, this thing has been pretty bearish all the way down. And if we take a Fibonacci from maybe this high here down to this low here and stretch it across so we can see where resistance is, we get right to the 50% retracement. Price hit it, smacked it, and then turned down, right? And then it started to rally a little bit here for 3 days, a 3-day rally, and then boom, just wiped out all that. So we're back in trend, right? So we can actually draw a trend line across the top of that, and it becomes very bearish, right? I mean, so we're bearish against that, and then we're bearish against this, right? Now we do have this uptrend here, so we can take a fib from the low to the high, I know it's going to get a little confusing here. So I'm going to maybe change the color of that. Maybe to like a yellow. Oh, no, that's not going to be good at all. Well, I'm going to undo that. Can we undo? Oh, yeah. Nope. Okay. Okay. Let's remove. Remove. Oh, let's try that again. Maybe, oh, that's it. The color is nasty. Okay. And I can't get a normal color out. I mean, once I did it. Okay. How about okay. Settings. Oh, yeah. No shades. Okay. Okay. That doesn't help, right? So, maybe that. So that's a 23% retracement right here. We're bouncing off that, and there's you can't really see that, but there's probably more room to drop. So bulls versus bears. I am bearish as long as we stay below 107, the height of that wick, 107.79. We can blow this up a little bit so you can see the structure here, right? I mean, the only thing that I'm looking at this is probably some type of a double bottom, and maybe we get some type of a retrace before a drop. And all my, these colors, I need to undo that stuff. Okay, let's see if I can try a different. Let's go ahead and we got the pound, the GBP USD. That's going to be coming up with all kinds of news. Excuse me. And we can see the daily here. Lots of resistance in here. Just tons of fun for everyone, right? So we had double top, and usually the double tops, the target's right here, right? And so this is bearish as well. And we look for a move down to like 118.62, right? And so what I'm saying that that's the market tie. This thing is like a flag pattern, right? Take the flag, pull the flag, and then extension. They might even break below that. As long as the wick is at 122.60, yeah, that's where we have. So bulls versus bears. I am bearish the pound. We may, if we go to a lower time frame, we might see some type of a bounce, but you won't want to play that. We might get a little bounce back up to here. 21.94 might be a bounce, and then maybe back to the 200 moving average at 22.63. But any type of a bounce, we may look to as some type of a short for the pound versus US dollar, given that the dollar is very, very strong, right? And it could be positioning that CPI is a lot stronger or hotter than expected as well, giving the Fed cover to actually raise rates. Okay, let's take a look at the Australian dollar, AUD, USD. Right. So there's more pips to be made on the short side and the long side, even though you could scalp counter trend, but you can swim against the current, but it would be better to swim with the current, maybe. So here is the Australian dollar. This is a daily chart. And see, they're all having the same type of, that's why people say, well, I diversify, I trade Aussie dollar and pound dollar and euro dollar. Well, they all have the dollar in it and you're not diversified. You're basically trading the same thing, right? So here is this, which was provide, if you're a US broker and you want to hedge, that could be an interesting way of hedging by, if you can't, because you're not allowed to hedge, but you could go long and short two different currencies who are highly correlated, right? That'll be your hack, right? Anyway, I'm going to be talking about hacks and how to gain access to certain trading platforms and accounts while being a U.S. citizen. So you don't want to miss the Las Vegas event. You got to be in the room to know how to Zoom. Okay. It's not going to be on Zoom, though. All right. So this looks like we can get support 68.53. So you use your oscillators and you look for overbought, oversold, and look for a way of getting into this trade to the south side. Okay, and let's keep it rolling here. Let's go. We went for our pound dollar, US dollar coming up, and then that's it, right? Pound Aussie. I mean, we have some yen, yeah. But let's take a look at let's take a look at the S&P 500, SPX 500, and we'll take a look at some because a lot of my guys they trade anything if it moves as a chart, but there's so many things. They're so highly correlated that I just give you the general view. Now, this is interesting here. This is kind of bullish somewhat. Right? Like you have this rejection where price we opened up at 40.92, came down to 40.49, and then we closed back up here, which is very bullish, right? So we can see some type of a rally, but it's maybe rallying in some type of a overall. I mean, the trend is not terribly bearish. I mean, we got this, looks like an inverted head and shoulders, but it's stalled out. We didn't get back up to the old high, which is what we would want to see it and to clear that, and that kind of held. Boom. And now we have lower highs and lower lows. And then we have this maybe rising trend line. So we may have a bounce on Monday, but that bounce may be stopped and we could continue the downward trend that we're seeing. We went from lower highs and lower lows to higher lows and higher highs, right? But we didn't break this high. So these guys are like a sniper on the hill. If you can't get past that, then you got to run for cover, right? So you might look for, if we break support at that wick, right? It's a tiny little wick, 40.56 or so. We break that, we could keep going and dropping, right? Bulls versus bears. I am like short term, bullish on Monday, and then maybe the rest of the week we go. It's probably going to be very indecisive going into FOMC. Again, it's the minutes that come up. Let's say maybe in the NAS 100 gives us a little bit clearer picture. Maybe not. And that was our head and shoulders we had, and we got the rally, but we got bearish head and shoulders too, right? We have bullish head and shoulders, bearish head and shoulders, and then the drop, and then the break north, right? And this actually looks kind of bullish as well. We broke above a key level of support. Old resistance becomes new support. So we could, and we have a rising uptrend on this daily. And we are at the bottom. We actually kind of broke, and that could be a fishing expedition where they fish for your stops and then maybe come back up. But but we are in a big the supply zone is like huge, like it's kind of I don't use supply zones that often, but when you see one like that, it's like and the price went up into it. Yeah, in fact, I'm going to be including my advanced supply and demand zone bundle, that includes the advanced trendline course that I did a few years ago, but that was based on a system taught to me by a $100 million hedge fund trader, and it's a powerful video set, and I'm going to include that for the early birds, for the first 10 people that sign up for the Las Vegas Mansion Mastermind in Las Vegas. Okay. In fact, let me go ahead and let's pull it up. Las Vegas Peppermint Mastermind, right? Our Elite Traders event right there. And that fabulous Las Vegas. We're going to have a beautiful place to learn. There's plenty of room, plenty of space. We're going to be together for 3 days. Learn from the best, improve your skills, transform your mindset, and we're going to have a lot of fun too. So make sure you sign up this almost sold out event, and I'm going to put a link in the chat box so you'll be able to go ahead and register and sign up. I look forward to seeing you guys, meet you in person. I did I haven't done live trading Vegas in a little bit of time. considering that we had like a pandemic, maybe that's probably why, right? So let's get back to our charts here. Okay, Nasdaq. So we're in a range. We're in a really big range, and like we haven't really done anything since. I mean, the high we had here back in August, and we're back to where we were back in June, and now I mean we haven't really gone anywhere. So it's been a great market for this oversold, overbought, buying and selling. But it moves into a range and breaks out, move into a range and breaks out. So maybe this moves into a range and either breaks south out of this supply zone, right? Let's look at Bitcoin, BTC, USD, and that'll probably be the last thing I'll look at today, unless maybe somebody wants to see pound yen. Oh, and then we're going to remove all the drawings. Yeah, and you can see we had a nice rally, but now we pulled back, and we got the little cobra breakout, like a little snake coming out. It's like an alien's thing that jumped out of the guy's chest. I know. Fond memories, right? Okay. I wish we could do something about this color. I know. Can I reset to default? Maybe. And we just get back to the defaults, like template, tips on black. Okay, oh, that's better. Oh no, it's not. Okay. Just don't play with this enough in order to figure this out anyway. But we're pulling back, and maybe we're looking at a short-term bullish situation. The short-term bearish, but I think we get a rebound after the big drop down like we did. Let me just make this a little bit bigger, right? And we have this small body Harami, and we might find some support in the 21,671 area. We have a spinning top, and usually we have this is part of a morning star bullish formation. Now, I'm not saying this is going to go all the way back to the top, but this could be a nice. I wish my fibs were not. I guess this color is settings. She could just template and apply defaults. Thank you. Okay, apply defaults, and we go all the way over to the side here. All right, so we broke the 23. Maybe we get there's a little stick sandwich. So we got a little congestion down here, down to the 20,910 area, and maybe we get some type of a bounce. But I believe that the bounce will be temporary, right? Maybe we reach down in here, and then we do a little bit of a push up from reaction to the 30% retracement, right? And we could get a new high, the same high, right? Right, and then we've got maybe a double top there, and then depending on where our inflation, if inflation prints high, well then we could probably see a collapse, right? But this is probably, we're severely oversold here, and we can see probably a bounce, right? So that's what could possibly be going on there. So I hope you found this helpful, being able to look at the economic calendar, go to my market heat map. You can get come over here and get yourself a copy of that, get access to it, a yearly access, and then you get 50% off. Go ahead and try that out. And I know that'll really influence your trading and help you make better trading decisions. That's what it's all about, right? So I love you guys. I wish you all the best. Thanks for watching. Make sure you like, subscribe, share it, give it to a friend. And and also give me some some love in the comments if you would like me to do some other things here. Okay, we'll talk to you soon. Peace and pips. Dr. Greg signing out. Cheers.
If you felt a spark here and want to see how these principles can be used in your own trading, go to www.elitetradersuniversity.com/apply to book a free session with our team. We have helped hundreds of people remove the frustration and obstacles in trading to become consistent, highly profitable traders. These are proven principles that just work. Happy pipping!